Welcome to another deep dive. Today, we're really going to cut through the noise around Alphabet's Q2 2025 results.
Yeah, lots to talk about there.
Absolutely. We've pulled insights straight from their earnings call transcripts, the official press release, and their slide presentation to get to the heart of what actually happened. Our mission for you today is simple. Figure out what drove their performance, understand the huge bets they're making, especially in AI, and, what it all means going forward.
Sounds good. Let's dive in.
Okay, so let's unpack those headline figures first. Alphabet posted some genuinely strong numbers.
They really did.
Their consolidated revenue shot up 14% year over year. That hits nearly $96.5 billion.
Wow. Just shy of $100 billion for the quarter.
Exactly. And what's maybe even more striking is how well they turned that into profit. Net income jumped 19% to $28.2 billion.
Right.
Which pushed their diluted earnings per share up 22%. That's $2.31 per share.
That's significant EPS growth.
It is. Operating income also climbed, hitting $31.3 billion, and their operating margin held pretty steady, over 32%.
Okay, so strong top-line growth, strong bottom-line growth. These robust double-digit increases really show, solid momentum across the business.
Yeah.
We're talking search, YouTube, subscriptions, and definitely cloud. Each of those segments delivered impressive growth.
But it wasn't all smooth sailing on the cost side, right?
No, definitely not. This growth came with a pretty significant hike in operating costs. They jumped 20% overall to $26.1 billion.
Okay.
A big piece of that was a $1.4 billion charge for a legal settlement.
Ah, right.
But even aside from that, we saw R&D expenses climb 16%, and G&A costs, general and administrative, shot up 65%.
65%? Wow.
Yeah, it really hints at the scale of investment they're making, even while that core business is humming along.
Right. So diving deeper into those core engines, let's start with Google Services, still the behemoth.
Oh, absolutely, the foundation.
This segment, which covers search, YouTube, subscriptions, generated $82.5 billion in revenue. That's up 12% year over year.
Still double-digit growth on that massive base. Impressive.
It is. And it delivered $33.1 billion in operating income, keeping a really healthy operating margin over 40%.
40% margin, yeah.
Within services, search and other revenue hit $54.2 billion, also up 12%.
Okay.
YouTube advertising grew 13% to $9.8 billion. They said that was mostly driven by direct response advertising.
Right. Those ads pushing for an immediate click or purchase. Makes sense.
And the subscriptions, platforms, and devices category, that saw really impressive 20% growth, hitting $11.2 billion.
20% is strong there.
Though, interestingly, Google network revenue, that's ads on partner sites, was down just slightly, 1%.
Okay. A small dip there. But what's really compelling, I think, is how the different pieces within services are firing.
Like what?
Well, that strength in YouTube ads, for instance, it's getting a massive boost from Shorts.
Ah, Shorts. Yeah.
They're now hitting over 200 million daily views globally. It's becoming a really key ad format, especially in the U.S.
Right.
And on the subscription side, that PayPal partnership seems important. It's not just payments. It's about improving the whole e-commerce experience and using AI for better recommendations.
Okay, so it's like these different growth areas are strengthening each other within services.
Exactly. It shows how Google's building this web of interconnected growth vectors that really bolsters the whole portfolio.
Okay, so services is the bedrock. But the really remarkable story this quarter, arguably, was Google Cloud.
Oh, definitely. Cloud had a fantastic quarter.
Revenue rose an incredible 32% year over year. That's $13.6 billion. It's easily outpacing the overall cloud market growth.
Yeah, significantly faster.
But maybe even more important was the profitability jump. The operating margin improved dramatically, almost doubled.
Right, from about 11.3% last year
to 20.7% this quarter, and operating income hit $2.8 billion.
That significant improvement in cloud profitability is, I think, a really critical shift.
Why is that?
Well, it suggests they're reaching a more mature market position. They're not just chasing market share anymore. They're hitting critical mass, finding efficiencies.
Okay.
And this growth, they said, is mainly led by Google Cloud Platform, or GCP, particularly core products, AI infrastructure, and those generative AI solutions everyone's talking about.
Right.
And the cloud backlog, that's future revenue already committed by customers, tells a powerful story too.
How so?
It jumped 18% just from Q1, and it's up a huge 38% from last year. Reached $106 billion.
$106 billion in backlog.
Yeah. It clearly shows customer demand is incredibly strong. Management even said they expect to stay in a tight demand-supply environment for cloud well into 2026.
Even with all the investment they're making.
Even with the increased investment, yeah, demand is just that high.
And this leads us right to the strategic heart of everything Alphabet's doing right now, AI.
Absolutely, it's central.
CEO Sundar Pichai was very clear. He said they're leading at the frontier of AI and shipping at an incredible pace. And that AI is positively impacting every part of the business, driving strong momentum. You can tell this is where the focus is.
Oh, absolutely. And the scale of AI adoption and integration is just, it's genuinely eye-opening.
Leave us some examples.
Okay, so the Gemini family of AI models, it's integrated across search, workspace, cloud, consumer apps.
Right.
It processed over 980 trillion monthly tokens.
Trillion.
Trillion.
Yeah.
And tokens are just, the basic pieces of data the AI works with, like words. That number doubled just since May.
Doubled. Wow.
Yeah, and the Gemini app itself, over 450 million monthly active users now. Daily requests grew over 50% just from Q1.
Okay, that's exponential growth.
It really suggests a rapid acceleration. They're scaling incredibly fast, which points towards, faster product advancements and figuring out monetization.
And you really do see AI woven into everything now.
Everywhere.
In search, you've got new stuff like AI overviews giving summarized answers.
It's time.
Yeah, and multimodal things like circle to search, where you can interact visually. Google Lens searches, apparently driven by shopping queries, jumped 70% year over year.
70%.
For advertisers, AI Max campaigns are getting 14% more conversions. Smart bidding exploration, a 19% average increase in conversions.
Those are solid numbers for advertisers.
Even their AI tool for making Ad Creative Asset Studio usage is up 50% year over year.
And it goes way beyond just consumer features. AI is genuinely transforming their enterprise solutions too.
Like what?
Agent Space, their platform for enterprise AI agents, has already booked over 1 million subscriptions. That really reinforces their whole ecosystem play.
1 million subs already.
And we're seeing real-world applications. Companies like Wayfair using AI for data streamlining, Mattel using it for product feedback, Target for security operations.
Interesting use cases.
Capgemini is using Gemini for cybersecurity. BBVA is saving employees like 3 hours a week through automations in Google Workspace.
3 hours per employee per week.
Yeah. These aren't just theories. It's showing immediate practical value for businesses investing in their AI.
But all this incredible innovation, this growth, it comes with a massive price tag.
Oh, absolutely. The investment is huge.
Alphabet's capital expenditures, CapEx, in Q2 hit a staggering $22.4 billion.
$22.4 billion in one quarter.
And that's a 70% increase year over year. 70%.
Yeah.
Management even raised their full year 2025 CapEx guidance from $75 billion,
which is already huge,
to an eye-watering $85 billion for the full year.
$85 billion.
They're citing huge investments in servers, speeding up data center construction, all to meet that escalating demand for Google Cloud and AI we talked about.
It's like they're building a whole new digital foundation.
Exactly.
And these massive investments, they're fundamentally strategic, right? They're essential for enabling future growth. It's like laying the tracks for a whole new high-speed network.
Right.
Now, free cash flow in Q2 was lower, down to $5.3 billion because of this higher CapEx and also some big tax payments. But it's important to look longer term. Their trailing 12 months free cash flow is still very strong, $66.7 billion.
Still generating a lot of cash overall then.
Definitely. And the company noted that future quarter-on-quarter growth rates could depend on the timing of actually getting that capacity delivered. Which suggests these investments are foundational. They need them to unlock future scale and revenue. It's almost like a light switch for capacity, flicking it on as demand ramps up.
Okay, that makes sense. Let's touch briefly on other bets. This is where things like Waymo live.
Right, the moonshots.
This segment brought in $373 million in revenue, but recorded an operating loss of $1.2 billion for the quarter.
Still burning cash, as expected for these long-term ventures.
But on the positive side, Waymo, their self-driving car division, hit a pretty cool milestone. Over 100 million miles driven autonomously on public roads.
100 million miles. That's a lot of real-world data.
And they're expanding into new cities: Atlanta, Austin, LA, the Bay Area.
So, while other bets still represent a big investment and, yes, current losses, that continued expansion and the milestones from Waymo signal a clear path towards, future commercialization.
Long-term plays.
Exactly. These are true long-term plays, positioned to maybe redefine whole industries down the line. It shows Alphabet's willing to invest heavily even without immediate returns.
So looking ahead then, second half of 2025, what should you, the listener, be watching for?
Well, management flagged a couple of things.
Okay.
First, year-over-year comparisons might look a bit tougher. Remember the strong ad spending around the U.S. elections in the second half of 2024?
Ah, right. Especially on YouTube.
Exactly. So that could create some challenging advertising comps for the rest of this year.
Okay, tougher comparisons. What else?
They also expect the growth rate in depreciation expense to speed up again in Q3.
Because of all that CapEx we just talked about?
Precisely. All those new servers and data centers starting to get depreciated on the books.
Got it.
So these potential headwinds, they kind of underscore the company's focus on using AI to drive efficiency and find new growth. They need to balance those huge investments with smart resource allocation.
Makes sense. Anything else on the horizon?
Yeah, they're also gearing up for the August launch of the new Pixel phones and devices.
Right, the Pixel 9 family, presumably.
And they plan a sequential increase in hiring in Q3, especially bringing in new graduates.
Interesting. Still hiring despite the economic climate?
Seems so. It reflects their ongoing commitment to investing in talent, particularly with all the demand for AI expertise. They need the people to build all this stuff.
Okay, so wrapping this up, this deep dive into Alphabet's Q2 really shows a company firing on most cylinders, doesn't it?
It really does.
The core services are thriving, cloud is booming and becoming much more profitable.
Yeah, emerging as a real powerhouse.
And it's all underpinned by this aggressive, strategic, frankly, massive investment in AI infrastructure and talent.
It's a fascinating balancing act. Current profitability driving huge bets on the future.
Definitely. So a final provocative thought for you to consider.
Okay, let's hear it.
As Alphabet keeps pouring this unprecedented amount of capital into AI infrastructure and talent, how might this escalating investment reshape things? Not just the competitive landscape in search, cloud, and advertising, but how might it fundamentally redefine what's even possible for users like you and for businesses in the years ahead? What kind of new aha moments could this sheer scale of innovation unlock for the world?
That's a great question to end on. What will all this AI power actually enable down the road? Something to think about.